So today we're joined by Joan Saladich of Geoskop. How are you doing, Joan?
Hello, good afternoon. Doing great. Excited to be here. Thanks for having me.
No problem at all. Thank you for joining us. I'm excited to chat to you today as well. So to start us off, could you give us a brief overview of your background and also the core mission of Geoskop?
Yeah, sure. So I'm John from Geoskop. We are a small climate boutique from Barcelona, Spain. The company was founded back in 2020. And we began working for renewable energy, especially in the field of predicting the impacts of climate change in the asset valuation. So one of the things that we saw is that renewable energy investors and these kind of utilities, they lack of enough know-how to understand how a wind farm or a solar park, how the resource will change in the next 20 years. But this has a direct impact on their P&L. And indeed, the climate modeling, the climate projections, the climate prediction of wind and solar irradiance was something very attractive to them. But one of the things that we saw is that accuracy, predictive accuracy, is crucial. For you to understand our client at the very beginning, they were testing us like they had their own weather data that they got from a wind farm, let's say, and they were sharing like 50% of the data. And they were saying, can you predict now the other 50%, the next 10 years actually? So we had to do a 10-year prediction that then they were cross-checking, and we saw nothing about the results. So the pressure was pretty high. It was pretty intense. And this was, this marked our DNA. Yeah, so we understood that in the field of the climate prediction, climate risk, you need to be accurate if you want to be useful for businesses. And so this is kind of the origins from Geoskop, the obsession for the accuracy. The obsession for the accuracy, the predictive accuracy, when we predict that variables wind, soil irradiance, temperature, precipitation, rainfall, and so on and so forth. During these years, we also count with the support of the European Space Agency, the ESA. So they have been helping us funding part of our research, which is great because ESA is all about satellites indeed. It's space agency. And we are like the climate boy of the ESA. We are the only climate startup. But that's super good at some point because it positions us, it helps us to be positioned as a research company into a point that nowadays, when we are working with one of the largest oil company, one of the largest oil company in Europe and in the world, and we have a contract with them. But it's super interesting because it's like, no, I want you to do research. So we are doing like private research, private climate research for them. So that's kind of the origin of Geoskop and our vision. But also in this 5 years, 6 years already, we also have been checking how the climate prediction market, how the climate risk market has been evolving. And at some point, we realized that due to maybe regulatory pressure, due to how the market is pointing to, let's say, disclosing climate risk impacts, a lot of startups came into the game. And here is where we saw that part of this information could be, or part of the insights that these startups deliver could be improved. And we also develop our own climate change models. So that's another thing that we are doing at Geoskop, not just prediction, but also developing our own climate change models.
Great. So a lot of, a wide remit there. There's a kind of quite a lot of tasks that you work on, and they all sound fascinating. But I mean, obviously, data accuracy is key. And then, just moving on from that, there's an awful lot of other considerations that you touched on that I think it would be really good to dig into throughout the rest of this conversation. So I guess to get straight into it then, there seems to be a trend in the industry of relying quite heavily on standardized dashboards for climate risk in particular, which often it boils complex perils down to a simple and perhaps generic score, maybe a 1 to 5 score. why is this oversimplification fundamentally flawed? And how does it break down when an underwriter tries to evaluate the same peril in maybe vastly different climates?
That's a very good point. I love this question. I love how you started, actually. So, yeah, it's not even 1 to 5. In some cases, it's a traffic light. So it's like 1 to 3, green, red, or orange. So let's say that we have a very critical view on this specific risk, climate risk course system. Let's say that the industry at some point they were having pressure from the regulator, so that the companies, businesses, any activity should disclose, should report how do they adapt to climate change, the mitigation and the adaptation. And in the adaptation, it ended up being, I want to be transparent, it ended up being a checkup list. Yeah, like, oh, is there a risk of flooding? Yes, no. Is there a risk of wildfires? Yes, no. And so indeed, these risk indices, these risk scores, these traffic lights are okay for this checklist. But for underwriting real physical risk, real climate physical risk, they are not okay at all for several reasons. I remember we were having a conversation not so long ago with a guy from the European Central Bank that is very focused on climate risk. And he was saying any deterministic prediction, like a risk score, or like saying, no, it's going to be this amount of rain, or it's going to be this temperature in 5 years, in 10 years, is wrong by default. Yeah. So when you use a traffic light, you're using a qualitative deterministic prediction, so it's wrong by default. Indeed, for ESG, for reporting, it was enough, but for underwriting risk, it's not enough. You need complexity. You need to embrace the complexity. You need, indeed, climate data. You need climate predictions, like the ones that we do. But we are not just delivering a number, or we are not just delivering, let's say, a qualitative view of the future, like orange, red, or 1, 2, 3, 4, 5. We are delivering a probabilistic approach. We are delivering uncertainty. We are focusing on the transparency. We are sharing the models that we're using. Let's say everything. So this complexity is what allows underwriters, or is what allows any business at some point to really measure and to really have an adequate view of the impacts of climate change, of the climate. On the other hand, the industry is very much focused in terms of underwriting in using the historical data only. But there is also strong evidence that when you just use what has happened up to date, this could be wrong. Because the temperature is changing, reinsurers feel it, and because they are feeling it, they are kind of moving the pressure on insurers, on commercial insurers, so that, let's say, chronic events are nowadays insured by these commercial insurers. So they pay for it, not reinsurers anymore. They are more for the catastrophic. So they are feeling it, the change. And if you use just the last 50 years, there has been this event with a return period of 100. It will be wrong for sure too, because it's changing a little bit. So you need to embrace this complexity, and you cannot use, let's say, these basic indices for underwriting. And also for ESG, we are seeing that the ESG frameworks are evolving. And so they are asking also for this complexity. They are asking for not just 1 or 2 scenarios, but maybe climate change scenarios, but maybe 3, 4 climate change scenarios, not just a qualitative insight or a checklist thing, but maybe more quantitative, including uncertainty. There is also an evolution. So I would say that underwriters, but also ESG, they are both every time more and more interested in climate data, in complex climate data, and in embracing this complexity, this uncertainty, which is the difficult thing here.
Absolutely, yeah. And I think you've painted a really vivid picture of the historical challenges of climate data in particular, but I think this can be applicable to many different kinds of data as well. There's the challenge of when data points on a page meet real life. As you'd say, the traffic light system versus what actually happens in real life. There's such a huge kind of disparity between those two things. And then what you mentioned about embracing complexity. I totally agree. Without the complexity in the data, the context and value can be lost. And we're at a really interesting tipping point where LLMs and AI are not only helping to kind of produce that data and those predictions, but they're also helping with the interpretation and the digestion of that data, which means you don't have to sacrifice the complexity, and you also don't have to sacrifice the efficiency and time that it might take to interpret that complexity, because an LLM is fully capable of it now. So yeah, no, thank you for that. And that is, as I said, a super kind of vivid picture.
Yeah, absolutely. And about this LM point, just a small reflection based on my personal view, because I was kind of back in 2023 to 2024. I was kind of, let's say, AI pessimistic or non-believer. Yeah, like this is not going to work. But at some point, as I told you at the beginning, we have our own climate change models. The funny story here is that when we were developing these climate change models, and it was by that time 2022, 2023, then we got the support from the European Space Agency so that we can put them in a platform and serve data. I remember talking to one of our colleagues from the industry, and he was saying, Joan, you've been so much in a cave that you developed something that nobody has. But it's so complex because we're showing accuracy metrics, we're showing agreement or disagreement of the different projections. Then we went to market in 2024, 2025, and it was like, wow, that's super cool, but it's super complex, the traffic light thing, right? But there was a point, pivotal point, in my view, I'm not an expert in AI, but maybe it was when ChatGPT launched 5.1 or something like that, late 2025, that all of a sudden we realize that AI can interpret our data, can interpret the uncertainty, can interpret the accuracy metrics, understand the projection. We have like 7 different scenarios, not 2 or 3. We have 7. And AI knows how to combine it. And so we prepare kind of a pilot agent, so a test agent. We put him code so that he could kind of ingest the data and process it by his own. And yeah, it's cool to see that nowadays we can take away. So as you were mentioning, traffic lights were done for a need to reduce the complexity. Maybe it's an oversimplification, but there is a need to reduce the complexity. I mean, ESG, maybe they are not experts in climate, in uncertainty statistics and so on. But nowadays, this is not necessary anymore. Because we are validating, we are doing demos live. We have some of our clients use it, actually, with their own personal Copilot or Claude or ChatGPT or whatever. And it's like, no, it's actually super funny because it can ingest the data that we provide. The platform name is Sustex, so that's the name of the platform where we have all these climate change models. And it's like it can ingest data, and if I want, I can go just plot me a traffic light or tell me the uncertainty, the score metrics, the risk metrics, make it ad hoc for the location. Not the same wildfire risk in Canada that here in Andalusia, in Spain. I was there a week ago and it was already 38 degrees, no rain, no vegetation. Canada is a completely different, environment. And so AI can handle of this complexity and can provide better results, honestly. So this completely shifted my view of LLMs from, let's say, AI pessimistic to AI optimistic.
Yeah, no, I mean, that resonates because I think I shared a similar view maybe 3 to 5 years ago, and in that time, we were learning about the potential of AI, I think based on consumer uses, like you maybe would see an image or a video generated by AI, and there would be all these questionable aspects where, I don't know, a video morphs into something different and something physically impossible happens. But when you think about it, LLMs they are just kind of data aggregation, interpretation, and pattern recognition. So it makes total sense that they're particularly adept at interpreting complex data and being able to turn it into kind of what's required. So I mean, leading on from that, and we've discussed this a little bit already, but I want to dig a little more into it. So much of the climate data today, as you say, was actually designed for ESG and non-financial sustainability reporting rather than genuine risk underwriting. I want to understand in a little more depth the challenges or the potential consequences for commercial insurers who might try to retrofit what previously could be described as disclosure data into their actual pricing and risk models?
The challenge are huge, especially if they use this index. I mean, these indices are just qualitative data. How can you fit that in your risk model? It's impossible. You won't fit that. I wouldn't recommend it. But on the other hand, it's plenty of reports, as we mentioned before, that reinsurers are focused every time more and more on these, let's say, super catastrophes rather than chronic extreme events that can happen one every 5 years maybe. And so they are not reinsuring that. So the commercial insurers, let's say, are those that have to take this risk. So this is happening. This is also happening, I guess, because they are feeling the climate change at some point. So it's like, we don't want this. And indeed, you're in a point in which you are getting pressure from one hand with all this extra load of risk. And on the other hand, it's like, okay, it's maybe it could be among other factors. Indeed, there are a lot of factors, but climate change is one of them. But I just have a 2 risk of flooding out of 5. What do I do with that? Yeah. So here there is a huge risk, a huge pressure to deal that. On the other hand, we are talking about science after all. So, for instance, something that just happened a few weeks ago, the IPCC, the Intergovernmental Panel for Climate Change, they were saying that one of the scenarios, which is the SSP 585, let's say that's kind of the worst case scenario in terms of greenhouse concentrations, emissions and concentrations, and like we're gonna go all in on pollution altogether, yeah. And they were saying that's no longer possible. So that's no longer possible, honestly speaking. I mean, science is getting better. Humanity is evolving. We are transitioning. We are seeing a lot of countries, regions transitioning to green energy. So we are not polluting as much as 20 years ago, or as the expectations that we had 20 years ago. So it's science change, yeah. A lot of things about this because there has been a lot of critics, and in the end it's like, well, it's just science, these things happen. But then from an insurer viewpoint, you have to understand that most of these traffic lights used to consider just 2 climate change scenarios. And one of them was the 585. And all of a sudden the IPCC says, well, actually, you could use that for, let's say, they call a stress testing, but it's no longer possible. And so imagine if you are a reinsurer and at some point you are trying to use this climate data or these climate insights that you could get, and you are just having 2 scenarios, and now you know the half of your analysis or half of your risk or half of your interpretation that you did is biased, is wrong. The guy who made it said, well, now, thanks God, that's good news also. This future is no longer possible. So those are the big challenges. At Geoskop, we have been always, and in Sustex in our platform, we have been always advocating for a more holistic approach, especially when physical risk is into the game. What do I mean with a more holistic approach? For extreme storms, for wind gusts, for extreme temperatures, heat waves, impact on health, and this kind of risk. It's better not to go on a deterministic analysis with just 1 or 2 scenarios. It's better to take a holistic view, a probabilistic view, with all the scenarios, the 7 scenarios, for instance. Yeah, you can discard this one that the IPCC was talking about. But at some point, the uncertainty when you're modeling the climate is big. It's inherent. It's a projection. So the best way to move ahead is to use all the scenarios. And this is something that, we are seeing when we are iterating with the market, with insurance, reinsurers, but also utilities, consultants, experts, climate experts that then generate insights out of our data. Because in the end, we're just providing data. We're not providing insight, just the data, and we focus on the quality of the data. We are seeing that every time more and more they are appreciating that. So within this complexity, we're talking about having the uncertainty, having the accuracy, and also having a lot of scenarios so that you can go with this holistic view. So it's a lot of challenges. Some challenges, it's because how the industry has been growing, or maybe I want to be honest here, a bit more opportunistic, because, let's take this scenario, the worst case scenario, and just report it. Now the IPCC said, no, not possible anymore. But there are ways to do it better. The important thing is to know which ways and how to compare if you're doing better or not against the standard methods using historical data, so on and so forth. So big challenges, but there are still a lot of ways to solve them.
Yeah, absolutely. I mean, it makes total sense in that with any data, the greater the sample size, the more accurate it can potentially be, the more it will dispel anomalies, and the more that complexity can introduce context. So yeah, I mean, that's very intuitive. And I guess this leads into this. So the climate science landscape it's constantly shifting. What's changed in recent months and years that's made it essential for insurers to embrace new approaches to data then? I guess aside from the IPCC change, are there any other changes that are really kind of driving that necessity to embrace the new approaches?
Yeah, there is also, as we mentioned, there is also strong evidence on, let's say, these extreme events, but not catastrophic events. They are increasing in intensity, in recurrency, and it's like a ball that nobody wants to take on their home. Yes, so reinsurers, that's the other challenge, I would dare to say. And also, so far, another challenge maybe would be like, it's not only about climate data. There is also socioeconomic data in between. There is also soil data. There is also the state of the buildings, the state of economics, people, more poor, less poor, more capabilities if there is a catastrophe going on or whatever. So maybe taking all this data and mixing it together with climate data, it's another of the challenges, but that nowadays with AI actually, and this is the part of where we are optimistic and we are pushing towards this. With AI, we can embrace it. So let's increase the complexity of climate data. Let's not be scared of that. Actually, it's a must. It's something that we must do. Let's combine it with other fields, with other fields of expertise, so that the analysis of risk, vulnerability, exposure, hazards can be more complete. And let's use AI, let's say, to empower this analysis. So this is something that it's not handed. Maybe I don't know your viewpoint also, because you're very much with insurance, but we don't see that the industry is yet taking it, but there are the capabilities. So far, all this domain expertise is very split like castles, and they should merge together into a city at some point. Yeah, and we don't see this happening yet.
Yeah, I mean, it's almost a kind of human tendency, isn't it, to categorize stuff and silo things so we can understand it better. And totally agree. I think LLMs, AI, and agentic AI in its latest iteration is making it so much more possible to do that. But we're really on the forefront of that. So we're seeing carriers starting to do that, but they're very much the forerunners. They're very much the kind of trailblazers in the area. But I think, as everything you've just kind of explained, it's going to become essential to do that. And to do that, we need to reframe our view on how we approach workflow automation, how we approach data analysis and data strategy and how that factors into underwriting and risk understanding. As you say, I think it's less common than it is not at the minute, but we're at a real tipping point where I think you're going to start to see insurers and carriers take that approach, and then those that do take that approach, they're going to continue to win, and the rate at which they win is going to grow. So they're really going to pull ahead of those that aren't able to, I guess, overcome inertia and implement those new approaches. But yeah, no, I totally agree. I think the castle to city analogy is great because there's such an opportunity to do more with data. And as you've also said, data that maybe isn't immediately obvious that it would be relevant to a certain risk. So taking climate data and marrying it with socioeconomic data and with soil data, as you've said, LLMs mean that we can actually pull interesting and actionable insight from that. Whereas previously, you would need someone that is an absolute genius in their field, working hundreds of hours a week to be able to do that as a person. So I think we're getting there. And I think in the coming kind of year or two, we'll really start to see that tip that direction.
Yeah, absolutely. Absolutely. Same feeling here. AI is already solving complex problems. I love to test it. I love to do it. I'm more like a scientist myself within the company, or applied scientist, developing deep learning algorithms, validating climate change models and things like that. And I'm quite surprised I'm skeptic. I always test everything. But I'm quite surprised on the interpretations that it's doing AI. And yeah, a little bit scary, but on the other hand, it makes me think, well, it takes the best of us. It makes us human, because doing the job factor disappears and the critical thinking enters into game. And the real add value is the critical thinking with AI. So, but yeah, absolutely exciting times. And I also believe that in a year, we could have this mixture of different domain expertise, different data, and getting like solid, validated, transparent insights. So absolutely.
Absolutely. And yeah, I think that comes with, I guess, ubiquitous access to central LLM driven tools that are focused on driving automation and running workflows. If they have access to all that, you've got the central nexus to pull all that context in. But yeah, as you say, it's super impressive. It's super exciting, but it's also a little bit scary. And I find myself trying to measure my expectations. But yeah, next couple of years will be really interesting to see.